following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good Wednesday morning here. We're going to take a look at the S&Ps quickly. And as we look at this is our weekly view on the continuous S&P future. There's that harbinger of bad news for shorts, that profile below price action on the long term on the weekly that developed this week. And this was yesterday's action right off that 2236 area. And then today we're having a little bit more follow through. So again, you've got that long-term slant that's angled northward. The breadth really, and I'm looking at for the S&Ps, the breadth on the daily really, hadn't been exactly cooperative, but the long-term weekly breadth and being on that support for the daily kind of overrides a lot of that. It would have been nice to get a little bit more deeper conviction with some daily breadth numbers that would have been a little bit more powerful. But again, the risk was to stay short the market around this 2236. So at bare minimum, if you were playing around with this and had a chance to take some weight off around here, that was the smart play. Again, that was against the long-term odds, in my opinion, and we're sitting pretty much yesterday on the open, and we were pretty much right in the middle here. We ended up right back in the middle on the daily, and now we're just kind of edging north a little bit. So, what's the big edge for today when it comes to trading the index itself? I think probably the bigger edge right now is just to drill down into some of the sectors, look at some opportunities within the sectors. Use the scanner to its fullest potential. You can find a lot of different unique things going on with this particular product. And we're actually putting a beta component in here now that you can dial in or dial out to try to make sense of, stocks that really, are they breaking out relative to the market, kind of moving up, and, find anomalies, possibly stocks that have high betas that are, supposed to kind of trade with the market in general. And then when there's some anomalies going on, it will hopefully be able to pick them out for you. So moving onward, let's take a look at a couple of stocks or a couple of instruments that we were trying to map out yesterday morning as decent opportunities on the long side. Just want to kind of hit the usual suspects. We talked about gold really being a ripe opportunity around this 1146, playing defense below. This was first time we talked about since October of last year, a profile appearing this week, and we had that kind of breakup in the profile with the yellow bar. Remember, that profile is really actually starting on that yellow bar time frame. We don't flash that back and forth on our products that we show now, and definitely not within the scanner, but really breaking up into the profile and then using the bottom of that profile, 1146, to move forward. We're up about, I guess, $20 an ounce off of that. Here's the daily. We talked about first targets on that trade being right here where we're at now, which is 1169. I think we've traded as high as 1169, rounded off this morning already. So you need to start thinking about taking some weight off, bare minimum. Remember, the trend, long-term trend is still down. Now you want to wait and see if we can kind of break through this area and use it as support. If it doesn't happen, you've got some lower numbers to focus on as far as that contra trade. So decent little thing that worked out. We're going to take a look at the notes. A very similar setup that worked out quite well yesterday. We talked about digging in between 123.20 and 123.10, being able to kind of say uncle below 123.10 based on your appetite for risk, but we reached a low yesterday of 123.18, I guess. Didn't get too far into that DMZ, but here's the daily on the 10-year. I actually think the 10-year could climb a little bit higher here. So I'm looking at this more of a long-term bounce, a little bit higher. If you kind of take this as in the same shade of gold that we just talked about, you really want to kind of wait and see. A little bit of a bounce has happened, but I think we're going to have a little bit more upside movement in that one. Let's take a look at the dollar. Dollar came off this morning a little bit. Not really, looking at this as throwing the towel situation. We talked about this support yesterday around 120. Actually, no, I'm sorry. 102.69, 102.70. So that's your support on the dollar. Still standing by that. I don't see any reasons this thing's going to turn around. There's too many things that can unfold with what Trump's going to put the stakes in the ground on. And, I don't think any of those are going to be weakening dollar type comments. And I think the market actually doesn't even have that priced in properly at this stage. All right, so let's go overseas for a little bit. Let's look at the CSI 300. We talked about this being a really good, decent bounce opportunity around 3,300. We kind of never closed below on the weekly, and I forgot the fellow that we were looking at a ETF. I can't remember what it was. That was mapping. It was like ultra short China A shares. Does anybody in the den know what that symbol was? We had talked about taking some weight off based on that CSI 300 being at that 3,300. Maybe somebody can type it in. I can't remember the symbol. Let's see. Somebody in the den's asking about Deutsche Bank. Let's take a look at that one. Oh, wrong screen there. Here we go. We'll take a look at RBS too. I think that's a real print around 19 this morning. So, again, Deutsche Bank, I think we had a gentleman call in right around here. I think this was back in September, was asking about Deutsche Bank. Talked about, looking at these profiles to try to eliminate the short side or the long side. Talked about being able to sell this around 14.16. And again, that's the Trump day. So then all bets are off. So then, this week, in fact, we've got a profile appearing below price action. And in our algorithm, seems like there's a lot of that going on right now. That is, bullish. And you got to kind of take that as there's a nice base balanced area below price action right now. We're trading up this morning around 19. Here's the daily to regulate that trade up. Here's kind of where you found support day before yesterday, 17.79. We're going to talk about this trade a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And David White was so nice enough to find the ETF that we were, I think, talking about the other day. Maybe it was a different symbol. Maybe this is it. CHAD, China A shares bearish 1 times. I think this was a 3 times ETF that the gentleman called in about. And David's also reminding everybody the FOMC minutes at 2 p.m. today, which is absolutely correct. So we talked about, I think somebody called in, and even though we didn't have anything going on with this ETF up here, and again, this is the bear 1 time shares. I think the 3 time is, I'll find it on the next break. But we talked, he's like, okay, well, I've been, short the Shanghai A shares ETF for a while, basically, or long the bear shares. And this was one of the reasons, going back to the Shanghai on the weekly, this is one of the reasons, we talked about, hey, you know what, enough's enough. We're down at a major inflection point. I actually did a little bit of a dog and pony show with this index and some internals in it when I was in Shenzhen, and this was one of the trades that I thought was pretty attractive. They had 3 brokerage firms there, or 3 brokerage firm heads, and talked about, just based on this simple fact alone, that we're at an inflection point. You got to take that for what it's worth. And there was a couple other things we looked at as far as some other indicators that we have in house. To bolster that concept. So that's one of the things, going back to what I was talking about before, but let's take a look at Deutsche Bank. We were finishing up with that. Somebody's saying, well, let's take a look at, just to go down the rabbit hole farther, YINN. Oh, not TINN, not 1010. Ren 1010, was that? Let's see. Yeah, I think these are the bull shares. It was that's it. Daggone it. Yang. Here we go. Yeah, so I think this was the one, and he called in about this. So obviously this is going to be exaggerated. Talked about, and this is the daily. So I think the call-in was around there, and we talked about the Shanghai being on support, or the CSI 300, and time to take some weight off. And that's the magic of it. Let's see. Deutsche Bank. So we were finishing up last break talking about this one. This is bullish. There's just no other way to look at it. And you got major support now at 17.16 on this stock. But here's the daily. I think we're trading up around 19 pre-market. And again, you kind of look at the dailies to kind of regulate the trade up. If you're looking at kind of blocking out one side of the trade based on long-term view, and we found support 17.79. And I think if you go into the scanner and you do and we did a cool sort yesterday. It was one of these right here. Boom, boom. Trading above profiles and coming back into maximum support. So let me just make sure Deutsche Bank's in here. I'm pretty sure it is. Yeah. Maybe it's not. Let me check the ETFs here. There it is. We don't have it in the scanner. I think we've got some on other. Let me get back into this. On the other instruments, you got access to about 5,000 instruments here, by the way. Let me type that in again. Don't have it in the scanner. Anyway, taking a look at Deutsche Bank. Again, we always use these kind of next step time frame down to regulate the trade up and orient the stops. And again, this will be a stop. This will be a stop. This is actually the Trump scene right here. And then this will be a little bit of stop out. Then you're back in the game because again, you're trading above balanced areas on the long term, and then the dailies, you're kind of getting back into the area where you can actually kind of dig in a little bit here. But what do you do with it now? That's the big question. As you look at Deutsche Bank, you got to remember, as we kind of edge up into these highs again, we can come down just like we did previously. So it's always a good idea when you get into this 1923 area to take some weight off. Financials obviously have gotten a heck of a bounce. And here's the XLF trading up a little bit this morning, 23.56. So here's the XLF in general. You also got the banking sector getting up into a fair auction top up here. You got to look at the market possibly getting near 20,000 and maybe satisfying some folks just to do it. I don't know if we're going to stay above 20,000, but these things could all blow through unfair highs just to do it. So keep that in mind. Historic. God, you remember when the Dow was breaking 3,000? Here's the utilities. I want to kind of reference this because we've obviously had rates rising, and these things don't generally like that. I actually think the 10-year is probably going to rally a little bit, and I think the utilities have a chance. Kind of a boring situation for a lot of folks, but I think we can race towards 49.5 and even maybe hit 50 just to do it. Take a look at some of those. You can drill down to the scanner and try to find some riper opportunities and just trading the ETF itself. Let's go back to a couple of usual suspects that we try to cover every day. We got to hit silver because we have to. Silver, we talked about maybe what in the more attractive situation relative to gold, and silver, just like gold, getting into that 1169. Silver's getting up into an area that you're going to have to pay attention to here. Remember, gold is not just in a massive reversal uptrend yet. I mean, we've just kind of coming up into the top of the box on the daily, 1169. We used 1146 as support. Silver's reaching 1653.54 right now, so you've got to pay attention to that. I mean, in my opinion, this is not the time to go long silver. It's the time, if you did trade a bounce here, to take some weight off, or if you're just waiting to see what happens here. That's always not a bad thing, but this is resistance in a downtrend. Not a bad place to look at gold and silver, at least as a stopping point, and possibly some short opportunities there, actually. All right, Let's take a look at natural gas because somebody asked about this yesterday. This is not for the faint of heart. I told you I didn't trade natural gas, but obviously these support areas did not hold. This thing kind of has a mind of its own, and that's why I don't trade natural gas. So just wanted to reference that from yesterday, and we're going to hit crude really quick. We're going to hit crude when we come back from the break, folks, but crude is on weekly support now. It's 52.26. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So yesterday we were talking about 5404 was going to be somewhat support for this. Right now that's broken. Don't make the mistake that, so this support was broken, and try to find another reason to hang in the trade. Sometimes you just got to say uncle, and that's the way trading goes. But you got a stronger support, 5226. That weekly, these longer term time frames take precedence always over the shorter term time frames. So you got a bigger support area, 5226 now. So that's kind of the way the ball bounces. with oil right now. Do I think it's going to bounce and go higher? I don't really see a lot of reasons why it can't. We talked about the dollar a little bit yesterday and how that, is kind of relatively affecting some commodities. Let's take a look at Tesla. Somebody was talking about trading natural gas in the den. I mean, I've traded it one time and one time only, and that was enough for me. I lost on one contract. I think I lost 13 grand before I knew what was going on. That was when natural gas was trading 13, and then it went to like 14. It was crazy. So that was it for me. 208.17. That's on Tesla. That's support. Aftermarket yesterday, we kind of reached that with some of the news, as you can see. I think that was in 2007, 6, maybe it was 6. Can't remember. So here's Tesla right now. Looks like it's trading pre-market. Got some prints off at 215. But we've already kind of satisfied that 208.17 aftermarket trading yesterday. So again, Tesla's still not looking like a short at this stage. You want to try to have something to lean on. Here's the daily here. These are the big numbers on the daily, but you got the 208 as a bigger kind of support area. Did that show post market? Yeah, that didn't show post market there. Okay. All right. So we're going to go into the scanner really quick. And we're going to let me get this thing regulated right. We're going to take a look at a couple of stocks that we're breaking down. Not a lot of things to look at on this list. I want to kind of look at Humana. All right, so 186.14 is big support on this particular stock. Obviously breaking down, trading about 197 pre-market here. But as we look at this, now in my mind, I think we actually could start reaching those lower numbers. So right now, if you're looking at Humana, let's call it 199 is resistance on this stock, and could have some more follow through with what's going on. And I'd hate to be in the scary topsy-turvy world of healthcare right now. Who knows what's going to happen with this? That's why you should probably stay away from it. Let's go into the scanner. Let's look at another one here. UNP. So here we go. This is the daily on UNP. Here's the weekly. So you're kind of getting into no man's land here on Union Pacific. I think you got to wait, be patient here. You've got a bigger area to kind of focus on here around 98.84 on UMP, but right now it's kind of okay to be short, not okay to be long on the intermediate. But I think you just got to wait until you look at that big time support that we just talked about. Let's take a look at downtrend resistance. These are stocks that just kind of like elevated up into resistance based around profiles. So let's just look at the grid here and let's find something relatively attractive. All right, so let's take a look at this one. CERN. Let me go into E-signal on this one. CERN. All right, so this is one you got kind of a dual time frame lineup here on a rally back up into resistance at around 49.49. So that's the weekly unfair lows and that's the daily unfair highs. So this, in my opinion, even though it had a pretty strong move yesterday, we're trading 49.09 this morning. We've kind of pierced it, or excuse me, gone up and touched it again this morning. Let me see what's going on here. Excuse me, this is yesterday's action. Yeah, sorry about that. Closed pretty much on the highs. In my opinion, if we, again, if if you're going to want to go long this based on a pretty strong day yesterday, you've got to wait for a close above 49.5. But right now, I think you've got a short opportunity on CERN, not necessarily a long term, but you've got a trading opportunity here. And that was just kind of looking at the grid on what I kind of thought might be relatively attractive. And I like that particular setup. So let's take a look at something else. Let's look at PDCO. PDCO. All right. So, and let's see what sector that's in. XLV. Okay, so this one's had a pretty good run up. I mean, the reason I like this stock, and again, the scanner just puts it on your radar screen. You're not going to be able to get these picks in any other venue because I don't, to my knowledge, know anybody's using our algorithm on another scanner. So 42.86 weekly M for highs, and that's pretty much in the ballpark 43 of the former unfair lows. So you kind of had this get back up into former support, now resistance area on PDCO. Might want to take a look at this. Had a pretty strong day yesterday, but again, now you're in an area where you can increase the risk reward scenario, play defense, more importantly, above 43, and look for a trading opportunity here. I'd love to see how this thing opens. If it opens above 42.86, then you're just going to have to sit tight. And one of the cool things would be is if we opened above and then just started reversing back into the profile itself. That would be super attractive. Let's take a look at a couple other picks on here and downtrend resistance. Again, stocks that have just kind of empathetically rallied up into a place where you can whack it again. Let's take a look at Bed Bath & Beyond, BBBY. This one, you know, BBBY. Let's just take a look at that. I'm sitting on a cushion that I bought at Bed Bath & Beyond. All right. You know, this one to me looks like it's consolidating. Forget everything else just to make another dive downward here and flush some more people out of this. We'll take a look at this a little bit deeper when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, guys, we were taking a look at Bed Bath & Beyond. No mystery to anybody else. This is actually, a stock that's kind of had some divergence, price action relative to Navigator down below. But, I still, just not convinced that it's time to ever try to pick a bottom on this thing. If you do have a daily close up in the profile here, which is bottom is 40.94. Again, I picked this off of this out of the scanner. I mean, it's obviously, just taking it rough lately. We could climb up into 42.98, but again, that's just kind of have to wait and see on that one. And then you've got to set the stops below 40.94 and kind of look at your risk reward scenario on this trade if you're going to try to trade a bounce. But man, I just think you got better things to look at that are a little less painful than trying to trade BBBY from the long side. That's a stock's got issues. All right, so let's take a look at another one here. Let's see, ENDP. All right. So, kind of got a little breakout going here on the daily. This is ENDP, and this is our weekly. So, I think this is one Tom and I were talking about a year ago as a short, if I remember correctly. So let's just kind of look at the big scene here. Pretty big situation yesterday, but again, I think this one. You've actually got a trading opportunity on the short side, 1758. What are we at this morning? No prints this morning. Closed at around 1759 post market yesterday. So again, if we kind of traded up into the balanced area on the weekly and reverse today, that would be really cool. And then it would be a little bit more of the scene that I'm reversing back into my downtrend. Might be something waiting and seeing would be a little bit better on the NDP. Okay, taking a look at the IBB. Let's take a look at this. All right, let's take a look at now March beans. All right, so if you trade soybeans, this has been something that, I haven't been wanting to be long soybeans. I've been looking for reasons to short it a lot. We got some reasons, 1028 the other day. We are below profiles on the weekly and the daily here, and I really see $10 as resistance now on this thing. So I'm not wanting to buy support on beans. I know Trump could, come in and have some kind of terrifying tariff situation, and I actually think that would. I think you've got some decent volatility plays you can do on beans right now. I don't know about directional. I'm more biased towards the short side, but if you're looking at trading beans, having some volatility option spreads where you're buying volatility, I don't think is a bad thing right now. All right. Let's take a look at July wheat. And considering I'm pretty bearish on grains in general, we had, again, 436 and 438, those two big numbers on the weekly day. You get all these in the scanner. So that's kind of your short stops above on wheat. I still think beans and wheat can go lower, and corn, actually. So that's the scene on the grains. Let's take a look at apple really quick. That's kind of interesting. 114.82 really popped right off of there, and that was also 115.25. So kind of got into that DMZ and popped. Not a big fan of being long apple in general. So this is, not really trying to trade the bounces. We talked yesterday, in fact, about trying to let this thing get a close back in 114.82, but that hasn't happened. But you did get a little bit of a bounce yesterday. Let's take a look at Microsoft really quick. This is one I'm, if you watch this show, I've been pretty bullish on this stock for a while. Getting back above 52, 53 was a big deal. Joey and I talked about this is kind of one you just long-term don't look at it too much. Try to let this thing breathe and catch support when it's offered. So, you got some there, you got some here. That happened yesterday. Looks like we're trading 62.60 pre-market. Is that real? Yeah. So again, looking for this to hit 63.45 and even higher on Microsoft. Let's take a look at Big Mo. This is one, spinning around here. It looks like it's looking for a reason to go higher. It looks like it's on the launching pad again. So Big Mo is definitely one to block out the short side, in my opinion. 68. Trading pre-market around there, so trading up a little bit this morning. We're going to take a look at the XLE really quick, and then look at some of the components. All right, so XLE, this is another reason, not exactly too excited about going short oil. The XLE having this kind of stake in the ground below, these profiles edging up, and now you've got this really cool scene with the profile appearing below price action on the XLE. Had a decent little move yesterday off of these support areas, 74.96, even though you really have nothing on the weekly to kind of pay attention to other than that unfair high that's well below. You've had some trading opportunities, 74.96. So, oil at that weekly support, the XLE looking decent. Just don't see any reasons to get short crude right now or any components in the XLE. So if we go into the scanner and we go into the XLE ETF, there it is. You can look across the scene here based on what kind of time frames you want to trade on, try to find some opportunities. If you're looking to try to find some dogs here, voila, RRC. This is not, again, oil starts turning south, and again, I'm thinking it's going to go north. This is one that could take it more so on the chin. Let's take a look at Halliburton. This is a pretty good example of trying to find relatively strong stocks to buy in an environment like we've been talking about for oil. So we'll talk a little bit more about Halliburton when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Show. So, Halliburton, we were taking a look at before we left. I mean, you see green across the board here, just in every time frame. And, this is, you're looking to always, in my opinion, try to block out one side of the marketplace. So you try to, okay, what's going on in the grand scheme of things with the globe? And then, the oil, which obviously has some relativity to underlying instruments within the oil-related stocks, especially in the XLE. So Halliburton, and you kind of, look at, okay, how's this acting relative to all that, what I just spoke of? And it's pretty easy to be able to block out the short side, at least on stocks like this. So then you're looking at it from the long side, and then you're looking at it from buying breakouts and buying support. So that's really the simplicity of trading in my mind, so it's try not to make it so difficult. Try not to see things that are there that only you see. I mean, these are these are bad things to get into habits of. So just, again, be just kind of trading for dummies type attitude, like, wow, this thing doesn't want to go down and the market's going down. I mean, those are things to just kind of keep in mind. A couple other stocks in the oil sector. I want to take a look at Murphy Oil, MUR. This is, it hadn't been outstanding, but and really, the reason I'm bringing it up is because you really don't have a lot of leverage here. I mean, if you're looking at something to short, it could complete the cycle down into 30, around, the 30 area, but it's kind of a crapshoot. I mean, try to find things that are going to be worth your time as far as your mental capital that you spend on things too. I mean, trading these things will wear you out. You guys know that. So try to make it, boring. Here's ExxonMobil. Here's the daily. And here's the weekly. So this is one, you're kind of looking at this one also from blocking out the short side. I think this thing's still got a lot more in it. And you got some really decent support around 88. And that's kind of a 88 to 89. That's kind of a weekly and daily kind of confluence situation on ExxonMobil. Also, taking a look at option spreads, just some simple ones, debit spreads, credit spreads. Look them up if you don't know what I'm talking about. Go to Google and just look at the simple option strategies that you can play that are not going to be, terrifying if they start going against you. And that way you can stay in some of these long-term trades and really kind of not have to worry about them and do your own thing during the day. There's a great segment that comes on, Thinkorswim does on TFNN. Highly advise watching it. So we took a look at, we got a minute left here. On phone for, I'm sorry. We have a caller. God, I didn't see that. John from Philadelphia.
John, good morning to you.
Good morning. I apologize. I didn't see the message on from TFNN. We got about 40 seconds left, John. What's happening?
I'll wish you well on your trading day today, John. Could I call in tomorrow and ask you to bisect and dissect the bond market for me? I'd appreciate it.
Yeah, would love to.
I'll call in then. Thanks so much. Have a good day.
Yeah, you're welcome. Thank you. All right. So I should do more than just kind of look off in space and talk about things that don't matter. Let's take a look at 3M before we close here. I hear the music. Guys, you've been great. Stay tuned for Larry, David, the rest of the crew on TFNN. Pick it up tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.